Hello everyone, it is Sterling here from Day Trading Forex Live, and I'm back for another month-end review. This is the February 2017 review, and as a quick spoiler to this month, this was a 4.8% profit during the month of February, so that was our total profit. Again, this is all based on the euro dollar and the pound dollar. I try to state some things each time I do this, just for anybody that's new that's watching. The bottom line, this month we had a total on the euro dollar and the pound dollar of 6 trades that make up that 4.8% gain. We had a 66% win-loss ratio and an actual reward to risk of 1.25 to 1. So not that great of a reward to risk ratio this month on our actual closed trades, but a decent win-loss ratio kind of made up for the reduced reward to risk this month. Overall, a decent profit. Now, one of the things I say every month, because it's a question I get every single time I do the video by at least somebody, and that is, does your strategy only work on the euro dollar and the pound dollar? And the reason I cover the euro dollar and the pound dollar in these videos is because those are the pairs that I use to teach the strategy. So every day I do a daily market preview, which is what you're going to see here shortly. So the trades that we take are from pre-selected manipulation points. That's what we term as listed manipulation points, and those are we only take trades from one of those levels when the market gets to what we term as a valid listed manipulation point. Every night I do a video where I go through those and I select the levels for the following day. Now the reason I do that is because I'm a firm believer that a course alone cannot create a profitable trader. There's a reason why most of you guys listening to me right now have probably been through a ton of courses. You've probably bought a ton of different softwares, maybe some expert advisors, some EAs, different types of price action strategies. And the reason you're still looking is in large part, in my opinion, because most educators just provide a course. The analogy that I give is that, and I'll come back to why we only trade 2 pairs, but anyways, the analogy I always give is, when I learned to fly an airplane, I started getting my private pilot maybe 5-6 years ago. And when I started that, you go through a ton of written information. I went through a ton of video information, video courses on flying. They technically teach you how to fly, what you should be doing, but common sense would tell you that that information alone does not give you the ability to actually jump in a plane and go fly it. The only thing that clears somebody, or the only way somebody can get cleared to actually solo, is 20 plus hours of dual instruction, meaning the instructor's sitting right next to you. And the reason for that is that no matter how good a course is, no matter how proficient the course lays out the information, no matter how well it lays out the information, it is not sufficient to create a pilot. And I'm a firm believer that trading is very similar. There's a reason why you want to learn to operate on people. You don't just go to school and then get dumped into the operating room. You go to school, then you go through a residency program where you are actually learning from somebody who's cutting into somebody right in front of you, doing small things to begin with, and then eventually you're able to do it on your own. So anything that's complicated, the education process is very similar. They don't just do a book or video education process. And so it's really strange to me that most educators think that just a course or something along those lines can create a profitable trader. The reason the daily market previews are there is because there's a big difference, just like in learning to fly a plane, there's a big difference between knowing something and actually being able to do it in real time. So that's what these videos are about, and I use the euro dollar and the pound dollar to teach the strategy, and I go through those 2 pairs each night. Could I go through 10 different pairs? Yes, I could, but I'm not gonna go through 10 different pairs in a daily market preview each night. It'd be an hour and a half long video each night. It just wouldn't be a good use of time, really. So I use the euro dollar and the pound dollar to teach the strategy, but the strategy can be traded on any pair that you would so choose to trade. Now, I do recommend, and I prefer people stick with more of your major pairs: Aussie dollar, dollar CAD, dollar yen, dollar Swiss. Even the euro yen, pound yen, pretty significant pairs, euro pound, New Zealand dollar, things like that. But that opens up a lot of other setups that somebody could potentially take during the course of a month. So what these videos really are is they're a reflection of what the strategy can do in a sample size. And you can kind of get some rough figures as to what you might expect if you were to trade double the pairs, or if you were to trade triple, quadruple the pairs. And that's something that can be done with this strategy because it's not a high volume strategy, so you can trade many different pairs. And then number two, because we only trade from pre-selected points, you know that if the market's not near a listed level, you can't have a trade. So a lot of members, even with full-time jobs, with a lot of responsibilities during the day, can still trade 4, 6, 8 different pairs, because what they'll do is they'll set their levels at the beginning of the day and then set up alerts to maybe come to their phone, or if they're by the computer, set off an alarm, something like that, to where they can go look at the market once a level's been hit. And then because our entry can only occur at the end of a 15-minute candle, you don't have to sit there and stare at the market. At the end of each 15-minute candle, once a level's hit, you look, see to satisfy the criteria of the mechanical entry, and then place your entry from there. So yes, the strategy can be traded on multiple other pairs, and it's really not that time intensive if somebody had the desire to do that. The other thing is we also have in the member side a program, a software called DTFL Pro, and what that does is it will automatically trade the confirmation entry from the points that you put in. So you input the levels each day and it will trade the confirmation entry. That's for somebody that is looking to automate the process as much as possible. You can't automate everything. Level selection is not automated, but the entry process can be, and that's what the software is for. So let's go ahead and go through again the euro dollar and the pound dollar here, what trades we have, and I'll show you that starting with the first of the month. First of the month was the first trade. That was a euro dollar. We took 2 losses to start the month, then had 4 winning trades after that. So the first trade was on, again, the euro dollar from 0740. So we'll flip over here to that, and 0740 was right here. Now if I bring over the daily market preview from that day, here's 0740. So February 1st, and if we look at this, we were looking for a second push to the upside, and we had 1 level or 2 levels there. One was 0772, one was 0740, which was the level that actually provided the setup. So 0740, if we look at that, we came into that level here. We got a break. We looked for at least a 3-pip break to initiate the stop run to start it. Then 2 candles later, we got the valid confirmation up, and the entry would have been taken on the following candle. Now this had this specific trade here, we had news coming out later in the day. This being a 2 p.m. release would have been a Fed statement. So the close on this trade, we were roughly about 12 pips down at the close of this trade, and therefore it is marked as a 1.2% loss. All trades, or in this case, it would have started out with a 20 pip stop loss, which would be 2% risk. It's what we base all trades off of, 2% risk. Whether it's 20 pip stop or 25 pip stop, it would be 2% risk. So your position size would be getting adjusted between those two. But in this case, if 2% is 20 pips, then 10 pips would be 1%, or 12 pips in this case, 12 pips down, would be 1.2%. So we start off the month, again, 1.2% down. Next trade was the second and final loss of the month, and that was on the next day for the pound. So the level that we had on the pound that day was 25.53. Now what you'll see here is that 25.53 was not a listed point. 25.53, we did not have that listed at the beginning of the day. We were looking for a third push to the upside, and the only level we had was 26.15 on the pound. You can see here that the market at 26.15, which was the level that, 26.15, you can see here that the market did not produce a trade from that. We came into this level, we blew through it. If we don't get a valid confirmation candle back up, which there are videos on YouTube that walk through the confirmation entry, but this blows through the level. It does as it should. If a level's not going to hold, we want to see the market blow through it, not produce a setup. That's what happens here. But when a cycle fails, we can trade what we term as a reversal once the ADR is hit. So once the average daily range is hit on that day, on that move. And in this case, we had a lower level at 25.53, which goes back to this point here. And this is a newly created point at that level, which is definitely a valid trade, and it resulted in a 2% loss. We came into that level, we got the stop run, we confirmed up the next candle, and then it pulls back later, stops that trade out. So that brings us to first trade negative 1.2%, second trade negative 2%, and that brings us to our max drawdown of the month, which was negative 3.2%. And then we go into the next trade. The next trade was on the 8th for the euro, so we skip over the weekend here. And we go to the 8th, and the level that we had on the 8th was 0706. That's again 0706. So to drag this over, that was one of our upper listed points, one spot 706 there on the 8th of February. And that level was right here. It was a really nice level. I mean, it was a great level that we had. We had a very strong confirmation short off of that right here. It moves down a decent bit, has a nice push off of that. In this case, where the confirming candle closes, we take the entry immediately when the third candle opens after that confirmation. So the entry would have been taken right at this point, and it runs off, hits maybe 20 or so pips of profit, comes back, and the close in this trade was right around the 5 pip mark, which is why that trade is counted as a 0.5% gain, taking us to negative 2.7% on the month. For anybody that has a question as to why this was not a valid stop run and confirmation, the level was 0706, and this candle here had a high of 0708 and 8/10. So it was only a 2.8 pip break, and if we don't get at least a 3 pip break, then the confirmation or the stop run itself is not a valid stop run at that point. So that's why that stop run and confirmation would not have been valid, and the second one was in this case. So sitting at negative 2.7%. After that trade, the euro and pound kind of went dry until the end of the month. The next trade was on the 27th for the pound. And on the pound, we didn't officially have any listed points for the pound on that day. Now, there were 2 trades. There was a pound short as well as a euro short. The pound short was from 24.35. Didn't have an official level to start the day. And then the next point that we had, the next trade that we had was from 0617, which is the same day. It was the one upper point that we had on the euro. So that point was a valid listed point to start the day, 0617. So let's cover the pound first. And the pound trade was from 24.35. So there's 24.35 right here. This is on the 27th for the pound dollar. And we talked about this level in the preview, about a level coming up, forming, and coming back into it. Pretty much drew out this exact situation that we had occur. We just didn't have the level officially formed yet at the time of the preview. So we come into it right here, the 35 level. It breaks by 3.3 pips. Next candle confirms down. Next candle provides any pullback that would have been necessary. And then this trade here, we had 8:30 news. So we close out ahead of any news that's capable of spiking the market 15 plus pips. And that's what we did there. Closed out at 1%. Which would have been 10 pips up in that trade or on that trade. That brings us to negative 1.7% because we were down negative 2.7%. So we're down negative 1.7%. And then the next 2 trades were, or the next trade I should say, was on the euro. Remember that level I showed you on the euro was 0617. And this was again on the 17th. So 0617 is here. In this trade, we came into the level, we get a stop run, we confirm down. In this case, it does pull back a little bit further, pulls back about 15 pips above the high, and so we'd have been down, you factor in spread, maybe 16 or so pips, runs off, and this trade is sitting right around the 28, 29 pip mark. I'm going to round it down to 25 pips, and therefore it's a 2.5% trade. That brings us from negative 1.7% on the month up to 0.8% there on the month. Next trade was the following day. It was on the euro as well on the 28th. And the level that we had on the 28th was 0626. So you can see here 0626, that was the level. That was our one upper point that we had on the day, 0626. And this one here was actually a room trade. We were in the room at the time that this one was setting up. We had an initial push into it here. The following candle confirms down, and then at the time of that confirmation, you are sitting roughly 10 pips from the high, which covers the highs, which the stop loss would cover the highs from that point. Standard 20 pip stop in that situation. This thing runs down, and the peak of that is about 48 pips. Our take profit was 40 pips on that position, all trades with a 2-to-1 initial reward to risk, and that runs off, hits a full 4% take profit or 40 pips. And that brings us from up 0.8% in the month to our month-end total, which is up 4.8% there on the month. So overall, a pretty nice month. It was definitely a month where we had kind of another test in patience through the mid half of that month. That's also probably why I've seen more and more members, because we've seen this the last couple months, especially on the euro dollar and the pound dollar. We've seen periods where we'll have a dry period between trades, and what trading 4, 6, 8 different pairs will do is it will shrink those periods down. You still will go through times where maybe you have multiple days without a setup, but the likelihood of having any extended period of time in between a trade is much less likely. But anyways, decent month there, 4.8%. That takes our total up to a compounded gain of 369%. This is all based on 2% risk. And again, that takes us up to a total compounded gain of 369% since starting these videos. Including February of 2017, this is the 22nd video, 22nd month-end review video, or 22nd month in the series. I did combine last year's November and December, so there's technically 21 videos, but 22 months covered. Out of those 22 months, this brings us to a total of 18 of those months being profitable, 3 months as losing months, and 1 break-even month during that period of time. All right, that is it for this video. If you guys want to learn more about the bank trading strategy, feel free to check out the website. A lot of information on the site, www.daytradingforexlive.com. And if you are watching this on YouTube, you'll see a link to the Forex course page where you can learn more about the course and lifetime membership. Or if you're viewing this on the site, you can click the Forex course tab, which is in the menu, and it'll take you to the same location. If you do have any questions along the way, feel free to shoot us an email at daytradingforexlive@gmail.com or support@daytradingforexlive.com. Either will get to the same location, and I'd be happy to field any questions that you guys may have. Again, that'll do it for this video. I will see you all back for the next one. Until then, happy trading.